Everybody, how we doing? Today is October 24th, 2023. I'm going to hop on here and do a quick little video of what I'm seeing right now in the Las Vegas and Henderson real estate market. Now, I'm going to speak on this topic for a few reasons, and I'm going to go a few different avenues, being a real estate agent and being a real estate investor. So first, the market is changing. And the market is changing because of the current rise in interest rates. It's no secret the interest rates have skyrocketed and almost double from 365 days ago. And we are kind of in a stale market. So what I mean by stale is there's not a lot of sales going on. Not a lot of people are buying homes, and not a lot of people are selling homes. And what makes it really interesting is that there's still low inventory in the market, especially here in Las Vegas. We're still around 3 months of inventory. So it's interesting. I've never been in a market like this, and a lot of other real estate investors and real estate agents haven't either. So what I'm going to start with is the real estate agent side, what I'm seeing. So on the retail side of things, sellers are not getting crazy offers anymore. They're not getting above asking offers anymore. And buyers now have power. They have power to go in and throw in some lower offers, ask for closing costs, ask for concessions, all these things. So it's slowly turning into a buyer's market. The issue is, as the buyer, the interest rates are a lot higher. And when you're a buyer, the interest rate is important because that determines your monthly cost of the home. And I'm seeing a lot of real estate agents post videos saying, hey, it's okay, it's just 8% and don't worry about it. Well, I'm kind of the opposite. I do tell my clients to worry about it because with those higher rates comes a higher premium of your mortgage payment. Your mortgage payment would be essentially double of the house that you would have bought last year. So it's important that you really look at the monthly payment and determine, can I afford this? Because if you're tight and you're like living month to month, paycheck to paycheck on a really high mortgage just to get into a house, I wouldn't suggest doing that. And the issue I have with these videos that people put out is they just want to make a sale, and they don't really connect with their client and say, look, is this going to put my client in a bad spot by putting them in an 8% interest rate just so they could get into a house and instead of renting? And sometimes, yes, it'll work. It'll work because down the line you could refinance them out and get them into lower interest rate, and they have a house and they stopped renting. But other people, especially in the town I live in, it's very industry driven. It's very economic. I don't even know if that's root. It's very economy driven, meaning that if things slow down in the economy, not a lot of people are going to be going to hotels, going to casinos, spending money like they used to. And so those people are reliant on the tourism here in town. And so if that slows down, then their money will slow down. And so what I'm telling my clients is, if you have enough money saved to afford this for 3 years, then go for it. If it's the house that you want, absolutely go for it and fire away. But if you don't, and you are either selling a home or you're renting and you are really leveling yourself up and you are stretching yourself a little thin, I don't think it's a good idea. And so when I do real estate as an investor, I always do it on the safer side. I don't like to take a lot of risks. I have taken risks before, but I don't absolutely love to do that. I think there's ways in this industry and in this game to safely progress as time goes on by hitting singles and doubles, to use a baseball analogy. All right, so that's kind of my retail take of things. On the other side, on the investing side, so it's very hard to invest right now because you cannot go and buy rental properties with these high interest rates. They don't cash flow. And it's super scary to go buy flip projects because, yeah, you could probably get good deals on these properties, but yeah, you're going to get good on the buy, but you're going to have trouble on the selling side. So you're going to buy this house and you don't know where the market's going. Interest rates continuing to rise. So eventually we might just have a stable slate market, meaning that the prices don't go up, but they don't go down. And if you're going to buy all these properties with the hope of flipping them for a profit, you're going to be in some trouble if you can't offload those properties. So my suggestion is to get creative of how you buy real estate, and that's what I do. I've bought 10 creative financing deals, which I'll get into in a second. And so if there's a house you like, I would reach out to your real estate agent and say, look, can we offer these people a seller finance deal? Can we offer this person who just bought their house 2 years ago, asking them, can we simply take over your mortgage by doing the subject to method? And this way, instead of going to buy a $400,000 house with an 8.5 interest rate, you're trying to get into that same $400,000 house with a 3 or 4% interest rate. And so I recently did this with a personal house that I bought, my new primary residence. I found the house that I really liked. It was expensive. It was close to $1 million. But I was able to structure a deal where I got a 7% interest rate. And at the time, that was high. And now it's not high. It's actually low. It's a 1.5 lower than the average rate right now of 8.5%. And so we don't know how high these rates are going to go. And so my point is with this video is you can, just because the home's listed on the market, I would go after those homes that are on the market. And if you find one, I would go directly to the seller's agent or even to the seller and say, look, why don't you finance me the home directly instead of me going and getting me going and get an 8.5 interest rate, Wells Fargo, Bank of America. And so that's what I'm teaching my clients how to do, and that is what I am personally doing right now. I'm going to do more videos on this, but this is just my opinion of what's going on in the market. It's very different. It's slow. Not a lot of people are leaving their good interest rates to sell their home and to go buy a more expensive home with a higher interest rate. And so that's why a lot of the market is stale in a lot of parts of the country. I'm Jay Griggs, and I will see you soon.